Hi, let's talk about Recon technology that provides hardware, software, and on-site services to companies in petroleum mining and extraction industry in the China. Follow firm should not consider as investment advice. The market cap based on last trading day 233 million. That's not so big, but anyway, they dropped since the market opening almost 50%. I know they had more than 50% drop recently, but I think it's going somewhere up from there. It's highly volatile share, by the way, so it was big pump since the last year if we open 1 year frame. So those who invested, for example, 31st of December at level 1.47 made in a half year, 800%. So that's huge. Of course, those who entered that day, they are minus 50. That's why it's highly volatile, and shareholders have been substantially diluted in the past year. Currently, it's unprofitable and not forecasted to become profitable the next 3 years. But there is also good news. Revenue is forecasted to grow almost 30% per year, and earnings have grown by over 15% per year over the past 5 years. But anyway, the snowflake analysis says it's not so fundamentally big company because the snowflakes looks pretty much red. So there's on a health side and on the future side. So let's see what's happening on the latest share price. So there was the M&A announcement. Recon Technology entered into a share exchange agreement to acquire 30% stake in Stary Blockchain Energy from he pumped them for 3 million. Recon will issue unregistered restricted Class A share based on 9.48 per share to Stary's founding shareholders in exchange of 30% of the shares of Stary. So that was the latest news on that. And market performance, anyway, 1 year return looks fantastic, over 500%. Huge profits, beats the industry, beats the market, of course. And we see here that this is also the long-term good investment. 3 years return 90%, 5 years 139. But usually if there's super gains, it means that long-term price volatility is pretty high. So yeah, actually where's the gains, there's the risks. So nobody knows how much there were investors on this prices, $13-14 per share. But we see here volumes 400k, 500k, 400, 700, and last day, actually this day currently 91 million changed the share owner. So it's kind of a big jump in the volumes. But anyway, it's better to buy the stock within the high volumes. That's what they say. Valuation side, PB ratio 6, and unfortunately there's no stock price forecast, and neither the tip ranks, but MarketWatch has, and it says stock price target currently in average $10 per share. So there is pretty much upside. I would say like 40% or so, 30-40%. Future growth 99% is forecasted annual earning growth. So it's pretty huge, pretty good for the company. And earnings per share is forecasted as well as to grow. Past performance, we see here that annual earning growth increased by 15%. So we see here the dynamic. So the earnings were pretty much they had the profitable year 2014, but since then they declined, and yeah, it's been pretty volatile, but it's going on the positive side based on the dynamic we see here. And currently, unfortunately, the company is unprofitable. On the financial health side, we see here that they took a lot of the debt last year. Yeah, last year, and yeah, same level as the cash. So there's unfortunately the cash level is not covering the whole debt, but I think like somewhere around 90%. I guess it's covering. Debt to equity ratio is 60%, and it's considered as high. Balance sheet looks like that. So there's a red dot, and they're not paying dividends. And on the insider volumes, we see that no volumes. And ownership breakdown: insiders holding 57%, general public 42%, institutions less than 1%, 0.6%. So this is mostly held by the insiders. So as we see here that there's a 3, 6, 9, 10 names on the so top 10, mostly insiders, which are increasing significantly. There's one of the members, chairman of the board, increased more than 4,000%, and there's also some of the others increased 1% and 7.8%. There's also a company that decreased 60%, and other other investors, the insiders are added over 20%. But anyway, it's a highly volatile share price. If your risk-taking abilities allows you to see on your portfolio minus 50%, then it probably would be good stock for you, but don't invest more than 1% of your portfolio, because everyone who sees minus 50% drop on their portfolio would hurt. And unfortunately, if the drop would be at the time when you need that money, it's even more hurting, because I saw from my portfolio I had a position on minus 40. I didn't sell, and that was good. They went back to, they break even, and they actually made on the positive returns. So if you're holding long, there's it reduced the risks. It made your potential returns better. And simple safe dividend shows that shares outstanding increasing every year, based, for example, 6 years ago or 5 years ago 1.13 million shares, and last 12 months 6 million. That's actually pretty big increased, so 6 times more shares out. Total sales are pretty volatile. They are decreasing based on few years back. So last 12 months sales growth decreased by 33%, in last year minus 36%. And usually we see 1 year frame, maybe 5 year frame, but if we open up max, so there were higher levels than today's, and it's pretty volatile once again. Those who invested, for example, 2014 are minus, they had minus 96, and even on this peak, Yeah, minus 63. So for me, it's better to buy low-cost fund on some of the sector. Okay, there's a less potential return, but it still would be doing better than some of the picks that, for example, I research. So nobody knows whenever the price goes up or down. Anyway, investing.com summary the stock for long-term investors as a buy by moving average neutral and technical indicators strong buy. Thanks for watching this video. Subscribe to the channel, like the video, and see you in a future one.